Hi, let me tell you about another great Manning book, Investing for Programmers, written by Stephen Papp.
Embarking on a financial journey requires understanding your goals and managing your resources. It's essential to evaluate your assets, control expenses, and determine your monthly savings. Investment advice may come from various sources, but it's vital to understand the relationship between risk and return. This book serves as your guide to achieving financial independence by directing you toward informed, data-driven investment decisions. Understanding assets is the first step in investing. Securities like stocks and bonds can provide financial returns through appreciation or passive income. It's important to align your investment strategy with your risk tolerance, financial goals, and time availability. Stocks represent ownership in a company. Their prices fluctuate based on various factors, and profits are made when shares are sold at a higher price. Dividends provide additional returns to compare with other investments. Bonds are loans to entities that pay interest and return the principal at maturity. Their risk is assessed by credit rating agencies, and prices can change if sold before maturity. ETFs offer diversification by holding various securities in one fund. They are cost-effective and can be passively or actively managed. Other funds. Mutual funds and hedge funds are pooled investment options with different trading frequencies and investor requirements. The Forex market involves trading currency pairs, with values influenced by economic indicators and market trends. Cryptocurrencies operate on blockchain technology and offer investment opportunities with associated risks and volatility. Derivatives are contracts based on underlying assets, with options being a common type that allows risk management or speculation. Private equity. Investing in private companies can offer high returns, but requires a different approach than public markets. Other assets. Commodities, real estate, and non-fungible assets are other investment options, each with unique characteristics. We discuss value creation strategies, emphasizing structured wealth-building methods over gambling and trading. Quantitative research uses numerical data, while qualitative research focuses on non-numerical information. Algorithmic trading and asset monitors help manage short-term price movements. Investment styles include value, growth, and income investing, with various portfolio structures. Risk management strategies like hedging protect against losses. Past performance is not indicative of future success, and market unpredictability means no strategy guarantees victory. Caution is advised during volatile market conditions. Programmers have a distinct advantage in the data-driven financial world. Your skills in data processing, logical decision-making, and system design can be applied to investment analysis. Setting investment parameters involves aligning your strategy with your personal goals and values, leveraging your programming skills for financial success.
Get this book at Manning.com